Good morning, children. I welcome you all to the accountancy class. As usual, we will do a recap of the golden rules of accounting. What are the three classifications of accounts? Personal account, real account, and nominal account. The rule of the personal account is debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. And nominal account, debit all expenses and losses, credit all incomes and gains. I think you remember this. Okay. Now let's go to the problem directly. Okay. Past journal entries in the books of Sasi Kumar, who is dealing in automobiles. So who is the owner of the business? Sasi Kumar is the owner of the business. Okay. Commenced business with goods 40,000 goods. So this goods should be taken as stock. He is starting business with stock. So what comes in? Stock comes in. Stock account debtor to cash. Sasi Kumar's capital account. Okay. See the next one. Cash introduced in the business. Now what comes in? Cash comes into the business. So cash account debtor to Sasi Kumar's capital account. I think the first two journal entries, you know it thoroughly. Okay. So this is the journal entry. What you have to do? First the heading. Journal entries in the books of Sasi Kumar. And then the format. Very important. Date, particulars, LF, debit, credit. Okay, don't forget the format. What is the first entry? Stock account debtor to Sasi Kumar's capital account. What is the amount? 40,000 is the amount. Write the narration. Invested goods into the business. Second entry is cash account debtor to Sasi Kumar's capital account. What is the amount? 60,000. Write the narration. Additional capital introduced. Okay, children, clear till this? Now see the next three journal transactions together. Okay. Purchase goods from Arul on credit 70,000. Returned goods to Arul 10,000. Paid cash to Arul on account 60,000. So for how much are you purchasing from Arul? 70,000. Due to some reason, there was some damage. Returned goods to Arul 10,000. So 70 minus 10 is 60,000. Can you see? Purchase 70, returned 10. How will I find out the 60? 70 minus 10, 60,000. That is the amount to be paid to Arul. Clear? Now let's see the journal entry. Purchases account debtor to Arul account 70,000 and the narration is purchase goods on credit. When purchases is debit, purchases return should be credit. Why? Purchase nominal account. Debit all expenses and losses, credit all incomes and gains. Purchase returns, it again comes in income. Okay. So purchase returns has to be credit. Who is the receiver? Arul is the receiver. So the journal entry is Arul account debtor to purchases returns account. Damaged goods returned. Right? I bought for 70. I returned 10,000. Now I am going to pay 60,000. Arul account debtor to cash account. Why cash is credited here? Because cash goes out. Are you able to understand the three journal entries? Purchases, purchases returns and the cash paid to the person. That is Arul. Clear, children? Okay. See the next one. Chandar account debtor to sales account. Sold goods on credit. Chandar account debtor to sales account. Sold goods on credit. How much? 30,000. And then again we have sales returns. When sales is credit, sales returns is debit. Okay. Sales returns, it comes in. So it is debit. Sales returns account debtor. Who's the giver here? Chandar is the giver. So to Chandar account. Damaged goods received. Damaged goods received. He sold goods worth 30,000. Now he is receiving 6,000 back. He is receiving 6,000 back. What is the balance amount? 24,000. But how much cash are we receiving from Chandar? We are receiving only 23,000. What happened to the 1,000 rupees? It is discount allowed. When I receive cash before the due date, I can give a discount. That is what the proprietor has done here. He received the cash 23,000. He gave a discount of 1,000 rupees. So why discount has to be debited here? Discount belongs to nominal account. The rule of the nominal account is debit all expenses and losses, credit all incomes and gains. Are you able to understand these three entries together? Right. Next one. Salaries. Salaries paid through ECS. ECS is a bank transaction. Okay. So, salaries account debtor to bank account. Salaries account debtor to bank account. And the last one is withdrew goods taken for personal use. See, whenever you see the word personal use, you have to remember drawings. You have to remember drawings, right? But here, he is not taking it as cash. He is taking it as goods. So, what will be reduced? What I purchase and kept for sale is reduced. Purchases is reduced, right? So, now the journal entry is drawings account debtor to purchases account. Drawings account debtor to purchases account. Is that clear, children? Okay. Now see the next problem. We have new adjustments in that. Arun is a trader dealing in automobiles for the following transaction. Past journal entry for the month of January 2018. Commenced business with cash. Now for this you all know what is a journal entry. What comes in? Cash. So cash account debtor to Arun's capital account. Purchased goods from X and Co on credit 40,000. Now this is a credit transaction. Purchase from X and Co. This entry also you know. Purchase account debtor to X and Co account. And then in your narration you have to specify it is a credit purchase. Clear, children? Here goes your journal entry. What is a journal entry? Cash account debtor to Arun's capital account, and then purchases account debtor to X and Co account. See the narration. We have specified goods purchased on credit. Okay. Next one. You purchase from X and Co. Now they are giving you a bill. You are accepting that is a trader is accepting the bill. When he accepts the bill, X and Co account debtor to bills payable account. To bills payable account. See, now you purchase for 40,000. But the bills payable is only for 20,000. What does it mean? Maybe he would have said, only this 20,000 I will pay it in this particular date. So that is just like giving a word that the amount 20,000 will be paid on this particular date. Okay, children, that is why 20,000 is there. The next one is sold goods on credit to D and Co account. You know, sale should always be credited. So D and Co account debtor to sales account. Okay. See the next one. Bills payable made. That is, we are paying the bills payable. The amount has been paid. So what goes out? Cash goes out. Cash has to be credited. Can I bring in the trader's name again? No. Because already a bills payable note has been prepared and accepted. So they are accepting that bills payable. Bills payable account debtor to cash account. Bills payable account debtor to cash account. Bills payable made. Is that clear? Purchased for 40,000. Prepared a bill for 20,000. Right? And then the bills payable is also being paid. Is that clear? You are able to understand? So now the next transaction. Received a check and discount allowed. From whom are we receiving a check? From the person to whom the credit sale was made. Right. That is D and Co. D and Co is a giver of the check. So he has to be credited. When I receive a check, where can I encash it? Only in the bank. So the bank is the receiver. Right? So bank account debtor to D and Co usually. But since we have discount here and the discount has been allowed, now discount allowed has to be debited or credited. It has to be debited. Very good. Why? Because discount belongs to nominal account and discount allowed is an expense. Debit all expenses and losses, credit all incomes and gains. Clear, children? So what is a journal entry? Bank account debtor. How much did we receive? 9,000. Discount allowed is 1,000. Who's the giver? D and Co. Okay, 10,000 rupees. Right? But in your narration, you have to specify check received and discount allowed. Is that clear? Next one, received commission. Now, received commission is an income or an expense. It is an income. What comes in? Cash comes in. So, cash has to be debited or credited. Cash has to be debited. Commission is an income. Commission belongs to nominal account. So, commission has to be credited. Income has to be credited. See the journal entry. Cash account debtor to commission account. Write the amount in the amount column and write the narration. Next one. Sold goods and cash received. Sold goods. Sales always debit or credit. Very good. Sales always credit. What comes in? Cash. So what's the entry? Cash account debtor to sales account. Salaries paid. Salaries paid through cash. So salaries account debtor to cash account. What is missing here? Yes, the amount in the credit column. 50,000, 4,000. Okay. Always a debit and the credit column should be equal. Last one. Building purchased and cash has been given as advance. That is the entry. Right? We will see how it is. Okay. Building purchased from Kumar and Co for 1 lakh and advance of rupees 20,000 is given as cash. What do you understand from this transaction? Purchased what? Purchased building. Journal proper. When they are specifying what has been bought, that should be called as journal proper. Here what comes in? Building comes in. Worth rupees 1 lakh. Worth rupees 1 lakh. Now, he is paying 20,000 rupees. How much is the balance? 80,000 is the balance. That is the amount to be paid to Kumar and Co. You are able to understand? So, building account debtor 1 lakh. To cash account. How much cash you paid? 20,000. So, to cash account 20,000. How much you should pay to Kumar? 80,000. So, to Kumar and Co account 80,000. Clear, children? Building purchased and advance given. 1 lakh building, 20,000 cash paid, 80,000 to be paid to Kumar. Is that clear? If you are able to classify the accounts and apply the rule, you can just like that do your journal entry. Okay, children? So, children, this is your homework. Do it in your accountancy notebook. You should not do it anywhere else. Do it in your accountancy notebook. No need to post it. Okay? Thank you. Stay safe. God bless you.